Ladies and gentlemen of the crypto space, we're live on a Wednesday, June 11th at 11:42 a.m. And what do we see over yonder? The boomers are coming. The boomers are coming. That's where all the money is. And is it Gen X in between? I don't know the generations. I'm a millennial. I'm the oldest of the millennials. And they got like one or two generations between boomers and myself. Was a forgotten generation, stuff like that. So they have all the money. Now, obviously, the millennials have a massive inheritance that's coming, and um, and all that capital is going to go into things that are understood by a completely different mindset. Now, boomers, we're talking about late 70s, 80s, and 90s at this point. Let's take a look very specifically. Uh, Boomer generation years, generators. 1946 to 1964. Huh. All right, maybe they're not as old as I thought. My father was the oldest of a boomer. May he rest in peace. Damn. So boomers were born. Oh, that makes sense. After World War II. Huh. How about that? Okay. So maybe I'm lumping in certain persons that have, if you're born in 1964, you're closer to tech years, late 70s, 80s, and you started to see some technology emerge. But obviously, 46, there was no semblance of electronics compared to current in any shape or form. Um, so it's a completely different mindset, completely different upbringing, completely different way of life. So, but we saw something way before the wall of money. The wall of money is boomers, eventually capital getting to millennials. And that wall of money is allocated right now based on very different mindsets. Now, the millennials are going to be much more likely to, one, take risks because um, they need to catch up. They need to experience progress toward whatever the hell people are talking about in terms of retirement goals and expectations or housing desires. And the housing may be out of reach for a lot of that capital, even though it's a tremendous wall of money that's coming to that generation, millennials. Um, so my inkling, my spidey sense tells me there's a great chance for significant monetization of these crypto fintech markets. Why? Why? What's the potential monetization of equity markets? Is everything going to pile into the Magnificent Seven further? And you're going to get what, one, two, three? Can you imagine? Can you imagine Nvidia goes like two, 3x from here, 4x? Can you imagine the market caps? These $1 trillion mega corporations sitting in at $5 trillion market caps. Could you imagine the smell? How disgusting that would be when you have large swaths of Dow Jones Industrials or S&P and Nasdaq that are relatively poor in comparison. Oh, a mere $50 billion market cap asset, $100 billion market cap asset compared to a $5 trillion Magnificent Seven asset. Could you imagine how disgusting those markets would be? So the point is, I don't think the multiples come in equities. I don't think that kind of bubble occurs this time because it's too hard to monetize already monetized assets. For instance, the bubble between 2001 and 2008 in real estate, it's not really the same type of bubble we have in 2011 to 2000, 20, 21, 22. Not the same type of bubble. It's still only a couple of multiples in real estate. Still, we're only talking about a couple of multiples, but what's the potential multiples in these crypto fintech markets? Things that are $50 million market cap, or dare we say $1 to $4 billion market cap. Aave coming in at a $4 billion market cap, has 30 something billion dollars in deposits, can run a 10x in multiples, and still have a lower market cap than Realty Income Corporation. And it's a bank. Banks have higher market caps than real estate for a reason, because it's tech, fintech, banking, money. Real estate is slow, but these numbers, 10, 20, 30, 40, $50 billion market cap, my general expectation is those kinds of market caps are coming to crypto fintech, the high-end banking products, the established infrastructure that has been tried and tested since 2022 and came into the market in 2018, 2019. Whatever Sky and MakerDAO, whatever comes of them, they'll be here. And but these market caps are coming for those types of assets, the MKRs and the AAVEs and the CRVs. And then you have all the beta thereof, all the beta of those primary products. And that's what gets weird. I mean, Curve comes in at like $1 billion market cap. 50 bill market cap puts it at like a mid cap corporation. Well, let's see. 50 bill market cap is what size quote? No, I want to know, is it like a mid cap? 50 bill market cap is mid cap. Mid caps are those between 2 and 10. So it's a large cap. Anything above 10. So, but if Curve comes in at 1 bill, it could go 10x on the money and still be a mid cap company. Mid cap with over $2 billion worth of deposits, and the potential it serves with regard to like cross-border banking rails, cross-border foreign exchange. That's frankly, it's all the five businesses of these fintech markets. So it's much more than I think any of us could speculate. And in any regard, 10x on the money for Curve, it's still a mid-cap company. The potential multiples in these crypto markets just basically makes everything in the US equities market, stock market, uninvestable. Think, why the fuck are you gonna buy any of that shit? From an investment standpoint. An investment standpoint, not the way people think about investing. People think they're like, I gotta buy something, and they try and come up with like a name that they could associate with it. I want to invest, and I'm going to invest in Subway because I love Subway sandwiches. That's not how you invest. So that you don't invest like that. That's why these types of assets are off the radar, but they won't be when they produce the multiple. Because once they're running 2x, 3x, 4x, that's when the capital managers and the fund managers and the investors, that's when the capital rotates from shit that's going nowhere, which will be the vast majority of the S&P and the vast majority of NASDAQ as well, rotating to shit that's going somewhere, which is crypto fintech. And this stuff more or less has the same qualifications and characteristics as tickers in NASDAQ. I mean, why can't you go into fidelity.com and type in AAVE and be like, buy 1,000 shares, call it whatever you want. I want to buy 1,000 Aave. Why can't you go into to the to the brokerage websites and do that? Why is that not available yet? But I think that's the nation, and that's the boomer wall of money. When grandma at 90 years old could log into her Fidelity and buy all this stuff that they buy in Coinbase. because now it's also available on Fidelity. So that's what changes everything. So, I was looking through my posts, a couple of interesting things. China, China's money bazooka, 1.5 trillion. That's now 1.5 trillion in Chinese denomination. That's US. So 10 and change trillion yuan. So they just punched 1.5 trillion USD denominated money bazooka. And that is certainly a bazooka to say the least. DXY is coming down, moves coming down, long end's getting bid. What does that mean? So that means this. DXY, these three. And there you go. Yet another day of DXY down, move down dollar bid, more or less, US debt. So move minus 1.5 down to 91. And 10-year, when the yields come down, long end's getting bid. So yields coming down. So this is a good looking day with regard to our primary KPIs, so to speak, the data we're looking for to say the market is heading in the direction we want to see. A couple of other cute posts. Anything that's in crypto that's putting out 10 to 40%, that's destined to be diluted. Nothing's going to put out anything putting out 40% is going to be diluted down to 20, 15. And that's what you want, because when that happens, your principal is going multiples on the money. If Curve's putting out, it's hard to say because the revenue is proportional to volume and inversely proportional to price point. So let's say something that's putting out 40% goes 10x on the money, and now that's 4% on spot. It's still your 40% on basis. Um, so that's the way that I like to measure. I like to measure relative to basis. What's your APR on basis? And that really tells you, well, what kind of cash flow uh, volume increase the protocol is experiencing. Um, so that's generally my expectation. I expect multiples in principal valuation, which will dilute or reduce percent APRs, but then you'll have an increase in business activity, which jack up your interest rates, APRs right back up. So you're sitting on, instead of 40%, you're sitting on 20% on a 5x on principal. Oh dear Lord, that's gross. So if you're sitting on a 20% on 5x in principal, what's the APR on your basis? It's like 120% APR or something. A 5x on, no, I'm sorry, that's a 200% APR on basis. A 5x on 40%. I don't know, it's a lot of calculations you can do and how you want to measure where your portfolio is relative to where it came from. So measuring APR based on basis is one way I like to do it. So while everyone's out there losing their minds over, I guess it's important, political stuff, tit for tat, I don't find that stuff as important as taking care of my family and taking care of, and that's not just me, that's my extended family. I find that the most important thing. And I believe that if everyone takes care of their own individual family, um, then everyone would be better off. But if everyone's out there thinking of everyone else's family, isn't that like a socialist type of mentality? Take care of your own family. If everyone takes care of their own family, you have a better society. So that's my 2 cents. So I think, generally speaking, most people miss the opportunities because they're out there being driven by stories that are told to them, the narratives that are told to them, the programming that is fed and given to people telling them how to think. Meanwhile, people should be thinking about themselves and their well being of themselves and their immediate family. And then society would be better off anyway. But that's not conducive with the story that is sold to the population by the powers that be. They want people thinking about different things. I don't know. And that's why most people miss it. That's why most people miss the opportunities. Just being distracted. While everyone's out there losing their minds, folks are buying the future of finance for pennies on the dollar. I mean, you buy something at 5 cents on the dollar, you're sitting on a 20x. And I think 20x's are actually relatively small compared to where we're heading. Open stable, the index of stable type products, that's actually pretty cool. That's why would you invest in S&P or Nasdaq compared to something like that? Open. Oh my God, that's a heck of an index. Like I wish I had my wife allocate some dividends in the brokerage account to, like one of the Bitcoin ETFs, and I'm like, she could buy open with those dividends. This is so cool. Now that is something that you DCA. That's cool. I would probably, if I was DCAing and I was younger and I was in that kind of mindset, I'd probably be DCAing Bitcoin and something like an open, like an index fund. That this is a cool product. Really is so easy a caveman can do it. Most people make it more complicated than it needs to be. Up and to the right, trading volume. The centralized exchanges, as the stock market does whatever it does, eventually centralized exchanges are going to get bid, and then folks are going to see that crypto is outperforming stocks. And then that's when the centralized exchanges get weird. That's when the centralized exchanges, especially Coinbase, continue to offload onto Base, and that's when capital rotates the base, and that's when all that capital that rotates the base is like, holy shit, look at all these ecosystems accessible via Stargate and AWA, and it's like boom, boom, seamless cross chain, pop some capital on Optimism, pop some capital on Arbitrum, pop some capital on Mainnet. And then the capital just bleeds over from market to market. And then it's an all out frenzy and a capital rotation. The rotators emerge. Isn't that inevitable? 1.5 trill, Aladdin ecosystem, ALD 10 mil market cap. I opted for Cleve, less than a mil market cap. Or is it? It did get bid. So what's it coming in at? 1.3 mil market cap. It was down at like 780, 800K market cap, but now it's getting bid because of what it is. In my opinion, I favor Cleaver the most out of the entire Aladdin ecosystem. You have your flywheel effect with FXN, but Cleaver paying 20, 30%, denominated in CVX. So it's obviously proportional to CVX price point. CVX rips 5X on the money. All of a sudden, you get 100% APR in your Cleve, denominated in CVX. And then obviously you have the furnace and all the components of Cleaver. If you want to go about that route, like you could just you buy CVX and you go ABC CVX on concentrator, and then you pop that into the vault on Cleaver, and you get an extra 25% Cleaver denominated. I don't know. I just like to own the base layer, so it's nice to see Cleaver get recognized for what it is, and that's literally aside from its voting capacity and the potential. So I'm not, I don't own it. I didn't buy what I bought for really the 25, 30%, which is nice because if I bought it for the 25, 30%, I would have been more. But what I bought it for really was the voting rights. And I bought a specific amount of voting rights that I thought was like, whoa. The fact that I could afford 2.5% vote power on Cleaver, which could basically pass a vote more or less, which means I could pass or at least contribute significantly to a convex vote because of the amount of convex VLCVX that Cleaver controls. I have tremendous voting power capacity within the Curve Federation vis-a-vis Cleaver's control over convex. And obviously, you get rewarded by that because Cleaver votes in on a Votium. And I wonder if they vote on Vote Market for convex rentals. Anyway, but the point is they have convex rentals, and that's where the cash flow comes from. That's how the furnace works, and that's the protocol. So it's really one of the un not understood protocols of these crypto markets and of the Aladdin ecosystem. I have the cleaver, I have concentrator. I like the cleaver. The reason I got the concentrator is because it was a fixed supply. There was no inflation, and it was dirt cheap. It's literally dirt cheap, and it's cheaper now than I think when I bought it, but it was dirt cheap when I bought it. And anyway, enough said. This was an old purchase. Old purchase. What else we got? You remember DeFi Summer 2025? Oh, wait, we're in 2025 because that's literally what's playing out. It's going to get weird, ladies and gentlemen. It's not going to be like 2025, but it's just going to be weird also. What the headlines about stablecoins is just on a whole nother level. I mean, where do you trade stablecoins? I mean, the software is already public, it's out there. That's it, period. The software is there. And it'll be everything that the centralized exchanges do, that it'll all be arbitraged on chain. Because why would Coinbase not arbitrage vis-a-vis Aerodrome? And why would Kraken not arbitrage vis-a-vis Ink and Velodrome? They just need to build the liquidity, and frankly, Base already has the liquidity for that. That's why Aerodrome is what it is. I I acquired my final exposure. I don't see, and I've struggled because I've been interested in wrapping up investments, and I rarely take investments. I rarely. It's very hard for me to buy something. But yesterday I did acquire my Aerodrome exposure, which gives me base. My Aerodrome, which gives me base exposure. So now I have my base exposure. I've resisted base for a long time because it's one network. Whereas most things I own give me exposure to many networks, many markets. But it's very hard to deny the Coinbase effect and normie money, like just folks, normies. They go to Coinbase and they put their money on the base chain and they buy the stocks on the Aerodrome. You know what I'm saying? That's so Aerodrome in many regards has the Uniswap effect of 2020. Like, why the fuck are people still using Uniswap? I mean, who the hell goes to uniswap.com to make an acquisition? I just, it's beyond me. And that just shows me my mindset is in a bubble. I live in my own little world. Who the hell goes to uniswap.com to buy something? You go to freaking CowSwap. You go to LlamaSwap. You go to Parify. I mean, anywhere but uniswap.com. Who the hell uses that user interface? But that's the whole point. And that's why Aerodrome's popular. Because of all the folks, the normies that use the Coinbase and they buy the stocks via the Aerodrome. And they're like, whoa. DC investor, just classic social media personality. And we are literally going to redo ETH Summer 2020 ARC. It's just going to be something comparable. Not the same. I think it's going to be actually more interesting. But the point is, back in my day, like a boomer. Yeah, I'm the boomer. I'm the boomer of crypto. I'm the old guy. When I sit in the sauna and the kids come in and I'm in my 40s and they're in their 20s and I'm the guy who brings up crypto, they're like, "What the fuck is this old guy talking about crypto?" But that's me. It's obvious to me. Way too obvious. Crypto investing involves exposure to ecosystems. At this point, all desired exposure should be acquired. Past tense, mission complete. And that's my point. That's why it's so hard for me to get exposure. I already have exposure to everything. I even have exposure to Atom and Cosmos hubs that everyone's forgotten, which will come back because it always does. It was popular in 2024, beginning of 2024, Dimension and Celestia and shit like that. It was very popular. I'll be back. But I acquired my last exposure to base. I got the optimistic super chain. I got the fractal. I have everything. I have Arbitrum exposure. I got every exposure to every potential market there is that's important. I have the SUI and the SAY. I don't care about that because I follow stable coins. So I'm happy to have the exposure to Sonic. So if we go over to here, you could always check on. No, I don't want swap. Right to stable coins. Thank you very much. 21 mil. Let's see where the SUI comes in. 1.1 bill. That's actually that's a fair amount. So in 2025, about triple, give or take, triple the amount of dollars. That's a fair amount, but 1.1 bill doesn't really put it high on the list. Ethereum, Tron, Solana, BSC, Base, Hyperliquid, Arbitrum has 3 bill. The 1.1 bill isn't really up there. Even Avalanche, 1.7 bill. OP Mainnet, half a bill. Mantle, 490. Actually, that's pretty interesting. Maybe I underestimate. That's a fair amount of stable coins. Where's Sonic? Sonic coming in at 414. Arbitrum Base coming in at 4 bill. Base is I'm happy to. I resisted rightfully, and I got a decent price. If you come over here and you look over at the Aerodrome, I like that line. I like that line very much. You got to have some. That's not even balls of steel. That's not guts. You're just you're bidding something that you have a conviction in, and you're like, I'm just bidding it. I have no idea where the hell it's going to go. Nobody buys this. The few buy this, or the degenerates, or the person that just has the sociopath buys this. But once you see a structure like this, that's a different type of buyer that bids this type of interaction right here. 'Cause that's different. So what do I always say? You either for the people that aren't like this is a certain type of psychology. Then you have the people that buy the breakout, the retest, and then the higher high. You want maximum confidence, you get the higher high above May of 2025. For me, I had enough confidence to say this green line, which is the lows back in September of 24, that was had previous interactions 2 times as early as July of 24, and that's a nice interaction to see. I mean, you got to remember, you're still sitting at this is a penny. Still sitting. People got it at a penny, 50x on the money. I mean, 10 cents for a bid. You see much more data over here on the Gecko terminal. But anyway, this is range low-ish, or this is a heck of a level. I don't see us retesting these levels. This is it would be narrative invalidation to revisit these levels, considering the cyclicality of flows, the flight school, the Coinbase was it Coinbase One or whatever the hell program they have, and it's just systemic on base to the point where I'm sure Coinbase does exactly what we all think they do with it. Anywho, Belgium looks good at this level, kind of tempting. Let's see if there's any NFTs available. Um, there's no, I'm not buying 91 cents. No, come on, 9% discount. What the fuck? All right, so there's literally no discount, and then you could go over here to see if there's anything on the Vexy. And you go over to Velo and 10% discount. That's the one. No, that's not the one we were looking at. This is what we were looking at. There's barely any discounts available. I don't know. There's no flight school program like Aero, but I don't know. I don't think 10% is enough. I my sense is I don't need any more. It's enough exposure. If I want more exposure, you know what I do? VE Velo Maxi, and you compound for a bit, a month or two, 3, 6 months. That's how you get more exposure. It's built into the system. Um, that's actually an interesting point to mention regarding Aerodrome. If you're over here and you see the Aerodrome, there's 25%, give or take. I would imagine those folks pulled it down. There was some 25 percenters, like 90K for 200K Aero. It's not worth it. 25% isn't even close to worth it because if you go to flight school and you go over to the Dune dashboard, you'll see that if you buy Aero from the market and you lock it in VE Aero Maxi, you get a 1.25% boost, so a 25% boost on uh, on your bonus. And then that's obviously then your bonus, which is flight school. So you got to hold it for a month, every 4 weeks, and that's at 30. And last week it came in at 39%. So it's above 30%, I would say. So you get your 25% and then your 30%. So that's 30% on top of 25%. So I'm like, all right, that's cool. So no one's buying aftermarket NFTs unless you're given like a 35, 40% discount. They buy it from the market. And that's exactly why it's getting there's such a bid. It just doesn't go down. So if you can get it in the 50s, if you got it in the 50s, I think that's an interesting number. Because that line's at about 49 cents. And that's my final exposure. And I cannot promise that I will listen to my own advice, but that is likely the case. Final exposure that I can't even see anything else even remotely close on the radar. I was looking at a lot. I was looking at resupply, and I'm like, I already have my primary exposure being Curve Federation. I don't need any more exposure there. This is not about just cash flow. It's about cash flow and market exposure because the market exposure gives you the multiples. And I already have mainnet Curve eco exposure. Resupply is redundant. It's unnecessary diversification. Why? It does well. Curve does well. Bags do well. Simple as that. Anywho, hope that helps. That should clarify some stuff. All right, let's do some commentary. See what you guys are up to. Sakatsu's in the house. Hello, my friend. Much a pleasure. Morning. Given how RSUP works, is it safe to assume that it can stay relatively flat for a while until emissions reduce? No, there's no way to know. You need cyclicality in the charts. You need to see it go up and down. And you see the psychology flip where people are bullish it and people are bearish it. You need to see the volume spike and the volume collapse. You need to see some structure. There's no structure. It's too early. There's no way to know what to expect. Any new asset, there's no way to know what to expect. You see, here's the thing. Look, from 40 cents to 230, that's multiples. It's a 400% rally. So that's psychological cycle. Then a collapse, or then it ran again. It's literally a double top, and then it blew past this bottom. So this is a very interesting chart structure. But you see it in Velodrome as well. Pop, pop, and this bottom type thing. Some degree in curve. Well, curve's very different. Very different. But is it? Is it this level? The blow off bottom? You see, you have the blow off bottom right here. Blow off bottom. Don't really have an arrow. Well, wait. Of course you do. Look at that blow off bottom right below. That's basically the hallmark. That's basically it's your blow off bottom, and that's where we're at. And we're way past bottom because bottom was in November 2024. My 2 cents. We'll only know where wheat resupply is in the coming years. It'll take some time for us to get there. Peter P, good morning. Much pleasure. Especially when crypto asset pays you, goes 10x, you don't have to sell. It's because you've been claiming the whole way up. It's your cash flow. Listen, your portfolio makes 5 grand a month. It makes 10 grand a month. It makes 3 grand a month. When it makes 10 grand a month, you got prosperity. When it makes 3 grand a month, you got austerity. You make more, you can spend more. You make less, you can spend less. Spending isn't just going to the grocery store or going to Best Buy. Spending is also reinvesting and buying things, buying assets, buying businesses. That's spending. So make more, spend more. Make less, spend less. Save for a rainy day. You know what I'm saying. Joshua, do you know current annualized percent cash flow return your portfolio generates and how to value volatile this is over a year? How does this compare to TradFi? Well, here's the thing. Um, I have data going back to 22, 22, 23, 24, and now I'm working on 25. 23, the overall portfolio made more than 22. 24, the overall portfolio made more money than 2023. And my expectation generally is that 2025 makes more than 2024. So I got year over year cash flow data going back to 2022, where year over year returns are greater in each successive year. Um, Basically, the data that I have says I would have made a big mistake if I invested in anything in equities markets. And that's here's the scary part. And that is considering going from 2019 capital to 2020 end of 2021 Q4 2021 capital, where it was like blow off top, everything was you can imagine where things were. And then you have the collapse in capital or valuations in 22. 22 was a catastrophe, and it continued to bleed out for 23, and then altcoins continued to bleed out into 2024 until November of 2024, and obviously Bitcoin bottomed basically in 22 at about 16 and change $1,000. So my experience is that cash flow has increased year over year since 2022. That's just my experience, and has it compared to TradFi. It would have been a mistake. I would have made a financial mistake if I did anything in 2019 with TradFi as compared to what I did with crypto markets. And I didn't do anything crazy with crypto markets because I'm not a gambler or trader. I don't do things like that. I don't do perp exchanges. I don't do leverage. All I do is buy things. And I didn't have the best consistency with regard to my rules. I didn't have defined rules back in 2020, 21, 22. I think my rules started to emerge sometime in 22. That's when rules started to emerge. And I had ideas in 2021. What was it? You go like this. Uh, eh. I had ideas in 2021. I knew what was going on. I nailed these ideas, narratives for 2022. This was a pin post for a while. But I didn't have my rules. Rule number one, rule number two, rule number three. Identifying the five clear businesses in these crypto markets. Allocating to exposure or ensuring you have exposure to the varying markets. And then you're done. Once you have exposure, follow rule number one, own more assets. Rule number one, ladies and gentlemen, is own more assets over time. It's very, it's kind of like the law. Like if you ever read, um, Treasury regulations or IRS regulations, very vague, very broad and open-ended statement. Own more assets. Rule number one. It's supposed to be because it has no qualification. What kind of assets? What types of assets? What price of assets? What attributes of assets? It's not the point. The point is general rule, very vague and broad. Own more assets. I wanted to keep it simple. I wanted these rules to be all encompassing. Rule number two, know when to stop buying assets. So you're buying assets. You gotta know when to stop buying them. Maybe the prices are too high. Maybe some sort of macroeconomic condition that says the prices are too high and they're probably going to come down. So you probably should know when to stop buying assets. But rule number one, buy more assets. Rule number two, know when to stop buying assets. But that's secondary. Rule number one means over time you must have more assets and you periodically stop buying them. So it's not your mindset like, all right, you're going through the day, I'm not buying assets. And then you have a good idea to buy an asset. So it's the opposite. You're going through the day and your base case, your base psychology is that you probably should be buying something. And then you have this condition that you've identified saying, I shouldn't buy it now. I shouldn't buy it now. I should have, and then back to base case, I should be buying something. What's the base case? The base case is you should be buying more assets over time. And the exception is that you should stop buying assets when the conditions aren't optimal. And then rule number three is everyone's favorite, the attribute, the qualification of what kind of asset you buy. Fuck you, pay me. Something that pays you. Because otherwise, you're just a sucker buying ice of liquidity in the boom meme coin market, the equities markets. The prime example of meme coins. Alessandro, hey, Cap, tell me your thoughts on Open. I brought that up actually earlier. I happen to like it very much. It's an index fund. Great boomer product. They should be selling that on Coinbase. They should be selling it on Fidelity. They should be selling it on NASDAQ. It's an index fund. Great product. Um, I don't know about fees and bribes. I don't know what they're doing in there. Maybe they're just buying and holding the token because unless they're locking the and staking the underlying assets, there is no fees and bribes. So it's probably just exposure to spot price of token in a balanced kind of way. However, you handle an ETF of sorts. So I happen to like that product very much. 10% per year on a 50 bill curve would be something. Oh, yeah. You know what I'm saying? Like we're currently coming in at about what, a bill market cap? Close. Yeah. About a bill market cap. All right. 10%. So imagine your portfolio runs 50x and you get 10%. You just grows because if your portfolio run if let's say it's paying 10% now, which it is more or less actually. It's probably like 10 to 14%, give or take. So let's say it's paying 10% now and it runs 50x. That means the 10% gets diluted 50, what times 50 equals 10? Is that like 0.2%? Yeah. Yeah, it's 0.2%. So if your portfolio ran 50x and no cash flow increase, it'd be 0.2% on spot price. But it's staying at 10%. So that means 50x, and so that's 50x. That's like you're on basis. That means you have a 50x on revenue on basis. So 50, what's 50 times 10%? That's 10 is 100, 500%. So if $1 billion market cap runs 50x to 50 bill and you're getting 10% of the money and you're currently getting 10% of the money on spot, that's equivalent to you getting 500% APR on your original basis of principal. Oh, can you imagine getting 500% APR on your original basis of principal? Oh my God. That would just be crazy. Okay, but that's where we're heading, in my opinion. And I don't even think that that's crazy. I don't even think like 50 bill. 50 bill is a nice number for a bank. Multinational, international, foreign exchange, credit, and derivatives business. Global. Think's pretty good. Think 50 bill makes sense. It's gonna take some time. You need some market caps to run up. You need the boomers to realize they're getting a shit deal in the boomer meme coin markets, and then they rotate the capital. I think that makes sense. Good morning, Fugu. Much a pleasure. John Steps at 150K market cap squill as the revenue share of open seems like a no-brainer. Oh, is that the case? Well, what's the revenue share? I mean, I don't think they're locking. They lock in the underlying? Where is it? I just retweeted it. I showed it to you. Are they locking the underlying? But they're not. No, they're not locking VE curve and doing voting. Everything else on the list doesn't generate any revenue. There's no revenue. And frankly, curves generate about 10 to 14%. Go over 12 and 12.42%. So I'm not too interested in the squill. I got the squill. I got an allocation. I'm a squid head. I, I participated. I have that. I like those guys. Anytime they ask me to talk, I'm always like, yeah, I look forward to it because nobody else understands me. I get a chance to talk to Sam and Curve Cap. Those guys get me. I like that. So that's cool. 150K market cap. Damn, that is low. I don't think it's going to be 150K market cap for too long. I mean, Leviathan's a big deal, in my opinion. I like that content. I've contributed to that content. Yes. Good morning, Cap. Much a pleasure. Thoughts on continuing to DCA here? Um, once you have a successful cash flow positive investment part of a portfolio, you actually have investments that produce cash flow. You're not DCAing. You're getting revenue, so it's equivalent to a salary. You bought salaries, so you think of it as a paycheck, and at the end of the week, you have capital. You have a savings account. I don't think of it as DCAing once you get past the critical threshold. Once you get past the critical threshold, now you have X amount of capital after 3 months, 6 months, 12 months. And then you can purchase assets and execute rule number one. There will come a point where you have too many dollars. And this isn't about being wealthy, like, oh shit, this got saved up $10 million. What the hell am I going to do with it? No, it's not 10 million, 10 grand, it's 5 grand, it's $1,000. It's whatever you determine, whatever people determine is that threshold to have proper balance. Portfolio needs balance. Portfolio needs to be pretty. Portfolio is poetry, it's sculpture, it's painting, it's art. What's the balance between stables and Bitcoin, for instance? Got to have balance. Probably should own some gold as well. And you can do that vis-a-vis Tether, Tether Gold. Go on JM Bullion and just buy some gold bars also, gold coins. Well, you need balance. And only you could answer what that balance must be. And how do you know when the balance is right? The balance is right when it's like, oh, that's cool. It feels good. You'll feel it. You'll feel an instinct saying, the balance is right. I have the amount of stables I need. I have acquired a good amount of Bitcoin or gold or what have you. I have bought what I wanted to buy, and you could sleep at night. The best measure for a successfully executed and managed portfolio is can you sleep at night? Always remember that, ladies and gentlemen. DCAing into money, ETH, BTC, not dollars. Well, you want dollars too. Cash, cash. So investments produce cash. Cash consists of dollars, stable coins, Bitcoin, gold, and your cash can consist of other stuff as well, Ethereum, Solana, Avalanche, whatever the hell you want. You are the person to choose. Not you, Yam. Everyone. Everyone's got to choose. Right? I don't want the other stuff. I keep it simple. I just Bitcoin. And obviously, I operate in EVM space, so it's TBTC, WBTC. It's fine with me. Just fine with me. Assume much a pleasure. Good morning, Reg Cap. What are your thoughts on Dinero? Mispriced? Maybe I'm missing something. Dude, everything's mispriced. There's a point where everything just goes parabolic. You know the deal. It just gets weird around these parts every now and then. It's an ETF of sorts. I don't need exposure to it. It's all good. It's excessive for me, in my opinion. A lot of people will own it, and that's cool. Actually, also thought DCAing more into curve here. Okay. I wouldn't call it DCAing. I would call it investing, unless you're holding in spot. But I wouldn't. It's not investing if you're just holding in spot. That's trading. I'm just using proper semantics here. Curve in the cap bucket. All right. Teach their own. I think it's cheap. I think we see larger numbers, higher numbers. We see principal appreciation. I expect that as well. Beauty purchase of AeroCap. Technicals say it's about to mark up massively. We'll see. I like the numbers. I was able to acquire a decent number. So there was a particular NFT that was available here, and I was able to buy it significantly cheaper, taking advantage of the flight school program to acquire the same exact quantity of the NFT for much cheaper. So a much cheaper discount than 25%, I think. You know, something like this. 39%. I'll probably get about 40% total discount by the time everything's said and done. Was it 30? If it's 30%, 30% on top of 25%, I don't know, something like that. Whatever the effective rebate is. So, anywho, I'm surprised to see dollar still trading flat, 15 the market cap. Dollar probably, the dollar product from inverse finance. Rule number three, suddenly stops. What happens? Huh? Why would it stop? Then you have a failed narrative. Then it's a failed investment. Yes. Okay. So you're asking about that. You sell, it buys back and burn. Buy, is buyback not for me? I don't like buyback and burn doesn't count. I don't consider that investable. I uh, I consider pay me. I don't care about the stock price. That's literally my pinned tweet. I don't care about buyback and burn. It's a mistake. I have no interest in it. I don't care about the growth of the crypto price. If you buy back 50% of the market and it doubles in price, I don't care. I don't care. Pay me. Give me USDC. Give me stable coins. Give it to me. Then buying back and burning. You're taking buy back and burn takes away the choice from people. I mean, burn, buy back. I don't know. Buy back and distribute. I don't like any of it. Give me the cash. I'll make a good choice. I'll decide what to do with it. Yes. Well, no, buyback and burn is not a dividend claim. If you're getting a USDC distribution or a CRV distribution, that's a dividend claim. But it's not a dividend because these aren't equities. These are property. These are akin to real estate, homes, much more so than stocks and equities. It's properties. And these aren't just standard dividends. These are just distributions from escrow contracts. That's very different than corporate distribution. Because once you assign a corporation and a corporation's distributing you capital, there's rules, LLC, S corp, complete pass through. So my 2 cents is those aren't applicable. We don't follow those rules. There's no one that subscribed to corporate rules here. There's no checkbox that has been checked. So these are inherently, in my opinion, partnership rules. That's another story. So my opinion is we get distributions from escrow contracts and how arguable a particular protocol is adherent or consistent with partnership rules, that's another story. Because that just is strength of argument. If you're investing in a crypto business that is strongly consistent and adherent to partnership rules, then partnership rules are quite interesting, particularly with regard to escrow contracts that have uh, immutable characteristics and deterministically execute. Because then it's arguable they have nominee interests. And you don't even, it's not like someone has to say they have nominee interest. You could prove by demonstration they inherently possess that characteristic. So you brought up dividends, so that plays into accounting and whatnot. Um, but inherently possessing a characteristic of nominee interest, holy shit, does that change the equation according to the rules as they are written. And the way rules are written, the choice of words matter. And that tells an interesting story. Now, I spent a lot of time over that over the last couple of years now. A lot of people kind of brushed it off. Didn't really read over the free, invaluable information that I've posted to people. Maybe didn't put it through enough AI to really understand what it means. It's that voter escrow partnership, a heck of a document, property receipts document. It's changes the equation in people's favor, and or at the end of the year, you just go to the accountant and pay a shitload of taxes. Everyone is free to make their own choice. Anywho, bit of a digression into accounting and taxes, but always something good to talk about, I guess. Hey, Noah, hope you're having a great one. Quick question. Have you heard of projects called asymmetry finance? Yes, of course, and inverse finance. I think they'd be right up your alley. Yeah, dollar products. I know these guys. Asymmetry is friendly fork of liquidity, and inverse is inverse. Everyone knows dollar and inverse. Um, Best exposure, in my opinion, to them, Curve Federation. You want exposure to the stable coins. You don't buy the issuer unless it's CRVUSD, which then you. That's why the Curve Federation changes the equation. It's you own the bank, you own a part of the foreign exchange. You get all the transaction fees associated with asymmetry, inverse, and all the stable coins. Magic Internet money is still very much on the table because Abracadabra is they've gotten it this whole time. They have paid consistently, reliably for years vote rentals, and they will continue to because they get it. Because they get it, they will continue to exist. Well, dinero is at 6 mil market cap. Probably. What is it like? Price to NAV? You're thinking 6 mil market cap has got 50 mil in the treasury. Oh, mispriced. I don't know. At some point, everything goes parabolic. Don't think too much. No, it's not inverse finance. Dolo is Dolomite's token. Oh, yeah, no interest. I don't know. There's a lot, endless protocols. Dante Tenero's scraping go to a bottom on the chart. Yep. 28% APY on SD Nero is attractive. Yeah, 28. Bear in mind, here's your takeaway: 28% is 28% is 28%. So round it off. 30% is 30% is 30%. So for those particular numbers, I'd go for stuff like Velodrome or Aerodrome. Uh, they're they're just dominant. And they've already what Aerodrome's done with Coinbase and like what Linnea is doing with Consensus and Nile, or rather what Consensus is doing with Nile on Linnea, and what didn't Avalanche buy some of Faro? I don't know. Was that a thing? But obviously Coinbase bought Aerodrome. That's a thing. So Kraken, Velodrome, kind of makes sense. So these kind of established infrastructures, a little different, a little different. These are big things. This is stuff that everyone else uses. Why? This is stuff that treasuries use. This is stuff that, treasury protocols. Everything trades through the foreign exchange. Everything trades through the centralized exchange. It's where everything, all the activity is. So 30%, hit the velodrome and call it a day. Or the aerodrome, which pays 40%. Would it be better to get exposed to curve or convex in that case? Everyone will have their biases, and I'm a base layer maximalist. Folks that say you get diluted at the curve level, I say you'll always have a vote rental at the curve level. I say, folks will say convex will keep gobbling curve, and I'm like, that's cool. That means there'll be that much less of an individual retail vote. So at some point, you have cyclicality between convex, VLCVX, and VECRV vote rentals for gauges. All right, great. So I don't see the dilution as a bad thing. I just see it as creating the cyclicality in the vote rentals, going between, you know, Vodium, vote market, stake down, cyclicality there, up and down, up and down. Um, that's my 2 cents. I wouldn't buy convex though. I would buy what is it, Cleve CVX, and I would do stuff like that. Get the arbitrage through the cleaver. You know, KMAT's talked about that. Because what's the point of buying? Doesn't it pay in APR? Pays in pure. Oh, there's the slippage on the exit, I guess. No, that's what the furnace is. I'm sorry. So you put the Cleve CVX, so you could farm. No, ABC CVX. No, yeah, it's just the furnace. So look. Cleve CVX is a 10% discount. What's the point of buying CVX? So at least buy Cleve CVX, and you get a 10% discount. And then you put it in the furnace, and then you're going to get, when you get payout in CVX, you're getting a total of 17% discount on CVX, excuse me. So that's the whole point. There's no point in buying convex directly from the market because there's literally a 17% discount right here with Cleve CVX. Actually, that's pretty interesting. Um, and then where you go from there and how you get cash flow from CVX is another story. I don't know. I opt for the ECRV for a reason, base layer, because I want the cash flow from CRV USD. You don't get the cash flow from CRV USD through VLCVX, okay? Because that cash flow gets distributed amongst the entire CVX, VLCVX user base, and that's a large user base. One bill TVL. Wow, that's pretty big. So they're running around at what, a couple mil market cap with a bill, total value locked. Bear in mind, it's total value deposited, total value locked. Total value locked is like 4-year lock. I doubt it's a 4-year lock. So I would say TVD. I don't like that TVL acronym. I'm renaming that TVL acronym. It's now TVD, total value deposited temporarily. And that capital would move somewhere else. It was treated better. Yeah, it's large. That's cool. And it pays 30%. 30% is 30% is 30%. Teddy, good morning. Tuning in late. Have a good weekend, everyone. Have a good week, everyone. Yes, it's Wednesday. Hump days here. Middle of the week. Hope everyone's having a good week. Thanks for the insights. As always, Cap, much pleasure. Makes more sense to get Cleve CVX for the ARB. Absolutely. Gammy, hi, Noah. Glad to catch your stream. I've seen your tweets on Cleve. You think it's still mispriced? Oh, yeah, most certainly. But the problem is people buy things for the wrong reason. Now, I got to be very clear. For myself, this isn't Cleve goes from $7 to $70 and I sell. I have no interest in selling this type of product. I didn't buy it to contribute to some sort of gain. I bought it because I bought 2.5% of the vote weight. Just wanted to own it. I buy things. I don't sell things. So it's very hard to express that to folks that are coming in, especially from like boomer meme coin markets, equities markets. Not yourself. I'm not saying yourself, Gaming Larry. I'm saying this guy just buys shit. This guy's going to hold the bag. He's not going to sell the top. He's a bag holder. I am a professional motherfucking bag holder. I hold bags, big bags. Hold them strong. I got a strong arm. Yes, it's mispriced. It's $1.2 million market cap, but I'm not. I don't care if it's $100 million market cap. I don't care. I bought it for the vote weight. I want the 2.5%, and I would. People who like wish they never sold their Bitcoin from 2016 when they owned it at $500. It's the same thing here for me in a sense. I want that 2.5% vote weight. Uh, you'll never get it back if it goes wherever it goes and then it crashes down and you might. I don't know. I want to risk that control. I want that control. I bought it for that control. So if you understand and you did due diligence and understanding what the vote weight of Cleve could be in the future, the significance of it is, aside from the fact that it pays 13, obviously significant appreciation, is paying 13% paid in pure CVX. Why buy CVX if you could get paid interest denominated in CVX? That's pretty cool. That's a 3,000 CVX. That's pretty cool. Yes, I do think Cleve is mispriced. Yes, I think people will buy it for the wrong reasons. Yes, I think everything that everyone already knows. People will make mistakes. People will make good choices. Do I think people should buy Cleve? I think people should buy what they understand. They should buy things that have meaning and significance and value aside from price. So there's a value to Cleve aside from price. It's its voting capacity. So if people see value in its voting capacity, that's a good thing to buy. I hope that makes sense. What's your take on August curve emissions cut and cash flow positive equation? Well, based on the emissions cut, the second it flips, curve's cash flow positive. Uh, that's cool. Now, obviously, if the emissions cut, uh, percent percent APRs on LPs on gauges are obviously going to get hit, slashed by the emissions cut. So we'll see. Because if curve goes up in price, to compensate, $2, $3, that'll compensate for the emissions cut very nicely. Um, Therefore, the APRs will maintain. So that's it's generally it's proportional. The emissions cut is proportional to the APR and LPs. But that changes the equation from a cash flow positive standpoint, that kind of KPI, so to speak. I All you can say is we obviously both look forward to it playing out. We both have a vested interest in price go up, which drives LP incentives, which drives deposits, which drives volume, which drives VCRV cash flow, which drives uh, vote rentals, maybe especially if APRs go up significantly, the price of curve goes up significantly. What does that do for vote rentals? All of a sudden, um, there's more bang for the buck. So it's much more worthwhile to spend much more because you can just so much bang for the buck given an appreciated CRV, which means a significant increase in LP APR. So curve goes up, vote rentals will go up because it's more valuable. And that's you know me. We're eyes on and we're locked in. So we're gonna have front row seats to what plays out, and I look forward to it, my friend. Does anyone know what on earth is happening with tapioca? Yeah, of course. Alto money. They're going through the same thing that they've said they've been going through for quite some years. Testnet after testnet after testnet after testnet. So their testnet is the new Alto money, and it looks great. Reminds me of Tapioca. They rebuilt stuff. They went through. There's doing more audits and test nets and audits. So I still like what they're doing. I know a lot of people hate on it, and I can both like what they're doing and also hate. I look forward to it going live. Is the odds of it going live at a good time likely? No. The odds it's probably very late. The odds a lot of its good faith is dried up. The odds are not in its favor. Do I like it? Yes. And it's okay to have all those feelings. Um, do I look forward to it going live? Sure. Is it going to go live? I almost guarantee, in my opinion, it's going to go live. These folks spend so much time and effort, including Ben, who's a friend of mine, um, to get it to go live. And all that time and effort, they're going to get it to go live. So I look forward to it going in live. Do I feel like it's not going to work out as everyone hopes? Probably. It's complicated and there's a lot of moving parts. And in the end, whatever happens in production, I don't think anyone could ever, you can't guess those things. What happens in production occurs in production. It's like what happens in Vegas stays in Vegas. What happens in production, you could only evaluate once it actually gets to production. So, that's it, period. The only thing you could say about what's to come of Tapioca and its rebrand to Alto money is, all right, we're going to see what's going to happen. And my expectation is that it will eventually be evaluatable. Evaluable? We can evaluate it, something like that. Wednesday, June 11th at 12:53 p.m. It is the middle of the week, and I will see you guys and gals again on Friday. Thank you all for joining me. 186 people made it to the end of the stream and are now a little bit more rational because of it. I wish you all a good one. Keep calm, cool, and collected, and we'll have some fun on social media. Till later this week. Catch you then. Peace.